Hey, I'm Bab, a swing and positional trader with a 15-year journey in the stock market. Trading isn't just a job for me, it's been my path to financial freedom. Starting from humble beginnings as a pizza delivery boy, I've navigated market setbacks and personal milestones, like becoming a parent to twins while steadily growing my investment portfolio. Today I'm excited to share my insights and experiences with you. While this video is created with AI tools, I want you to know that the knowledge and experience behind it are mine. Every piece of advice comes from my real-life journey in the stock market. So let's dive in and explore how you can understand these secrets and get wealthy based on years of personal experience. Chapter 1. What is the stock market? The stock market is a platform where you can buy and sell shares of publicly listed companies. Major exchanges like the NYSE, New York Stock Exchange, and NASDAQ facilitate these transactions. Regulated by the SEC, Securities and Exchange Commission. When you purchase shares, you become a part owner of that company. For instance, owning 1,000 shares of Apple makes you a shareholder in Apple. You can buy and sell these shares anytime during market hours. But is that all there is to the stock market? Absolutely not. Knowing which stocks to buy and sell is crucial. To fully understand the stock market, see it as a business and a way to invest for your future. The principle of buy low and sell high is popular. But it's not just about making transactions based on hearsay or tips from others. Some people view the stock market as a form of gambling or speculation, often because they have witnessed individuals lose significant amounts of money. It's essential to realize that this is not a place for uninformed decisions or following others blindly. Think of it this way: would you trust a dentist to perform a root canal after just watching a few YouTube videos? Probably not. So why would you take a similar approach with the stock market? Investing or trading requires knowledge and understanding. Learn from others, but make informed decisions based on your own understanding and research. Chapter 2. Understanding the stock market, a business perspective. When we talk about the stock market, it's helpful to think of it like running a business, similar to owning a brick-and-mortar store. Imagine a successful clothing store, They offer a variety of quality items that are in high demand. They buy these items at the lowest possible price and sell them at a fair price with a predefined profit margin. The stock market operates similarly. Think of it as shopkeeping. Just as a store owner diversifies their inventory to attract more customers and maximize profits, investors diversify their stock portfolios to manage risk and capitalize on market opportunities. Chapter 3. Treating stock market investments as a business. Can a store owner expect to sell all their goods the same day they are stocked? Of course not. They are prepared to wait for customers over the coming weeks or months. Similarly, stock market investors or traders understand that it takes time for their investments to appreciate. They continuously buy and sell, patiently waiting for the right time to realize their gains, thereby earning a good amount of money over time. So just like successful shopkeeping requires knowledge of what products to stock and when to sell, successful trading in the stock market requires understanding which stocks to buy, when to buy them, and when to sell them. This same principle applies to the stock market. We shouldn't expect a stock we buy to increase in value and sell at a higher price immediately. Just as a store owner diversifies their inventory, investors should diversify their money across a minimum of 20 to 50 quality stocks. This approach reduces risk and decreases the worry about any single stock performing poorly. Consider it a high-volume business. If our shop has 20 to 50 high-quality products, we can afford to wait for the right price to sell each one. By thinking of stock market trading or investing as a business, we focus on long-term growth and sustainability rather than quick profits. Chapter 4. Investing in the stock market, education and discipline are key. Consider this. When you work for a multinational corporation, MNC, attend college or drive on the road, you don't call it speculation. But when it comes to investing in the stock market, many call it speculation. Why? Because most people start trading without learning anything about it. We often jump into the stock market without reading any books, practicing, taking any training or courses, or learning from someone who has successfully earned money in the market. Instead, we rely on hearsay, seeing prices fluctuate daily, and then impulsively decide to trade. Would you take a college exam without studying? Would you drive on a highway without first learning how to drive? If you did, driving would also be considered speculation. If you jumped into a river without knowing how to swim, it would be speculation. Similarly, if we invest in the stock market without any knowledge or preparation, it becomes speculation. The critical lesson here is that we must learn before we invest in the stock market. Educate yourself as much as possible before entering the market. Read books, do paper trading, and understand the financials of companies and practice discipline and patience. By doing this, investing or trading will not be speculation or gambling for you. Instead, it will become a business or a side hustle that can generate substantial wealth over your lifetime. Treat your stock market investments with the same seriousness and preparation as any other important aspect of life, and you will be well positioned for success. Chapter 5: Stock Market, a Professional Business. Trading or investing in the stock market is a profession and a business. To succeed, you must understand the rules of this business. Conduct your own research. Practice what you've learned, stay updated with news, and analyze the companies or stocks you want to invest in or trade. Let's revisit our earlier example of a clothing store owner. The store owner must understand current market trends, know which garments are in demand, and identify suppliers offering the best prices and quality. They won't buy clothes that are too expensive, but will purchase items where they can apply a markup and sell for a profit. The owner focuses on quality, demand, and reasonable pricing. Similarly, in the stock market, we need to understand and apply these principles. By treating stock market activities as the business, we move away from the misconception that it is speculation or gambling. It's about making informed decisions, understanding market trends, and executing strategies with discipline. Calling the stock market speculation is a misunderstanding. It's a business of trading and investing, requiring knowledge, skill, and patience to achieve long-term success. Chapter 6: The Unique Advantage of the Stock Market. No direct competition. Why should we invest in the stock market? What makes it so special? One of the most compelling benefits of the stock market is that there is no direct competition. Let's explore this concept further. Imagine you open a garment shop in a bustling street market. You'll face competition from already established shops with loyal customers and high-quality products. Attracting those customers won't be easy and could take a lot of time, potentially limiting your profitability. You also have to compete with online stores, adding another layer of competition. In contrast, the stock market operates differently. Here, millions of people can profit simultaneously if they approach it as a business. Anyone who invests with knowledge and understanding can earn a substantial amount of money. Let's break it down with an example. Imagine you and several other investors each purchase shares of a technology company, XYZ Inc. Investor A buys 100 shares of XYZ Inc. at $50 per share. Investor B buys 200 shares of XYZ Inc. at $50 per share. Investor C buys 50 shares of XYZ Inc. at $50 per share. The company announces strong quarterly earnings for 2 consecutive quarters, leading to increased investor confidence and a rise in its stock price. After the latest earnings announcement, XYZ Inc.'s stock price jumps to $70 per share due to positive market sentiment and increased demand. Investor A sells 100 shares at $70 per share, realizing a profit of $2,000. Investor B sells 200 shares at $70 per share, realizing a profit of $4,000. Investor C sells 50 shares at $70 per share, realizing a profit of $1,000. In this scenario, there are no losers. The stock market allows all participants to make money simultaneously, provided they invest wisely and understand the fundamentals. This lack of direct competition makes the stock market unique. Investing in the stock market, when done with proper knowledge and discipline, offers a remarkable opportunity for everyone to succeed. This unique aspect sets it apart from many traditional businesses, making it a powerful tool for wealth creation. Chapter 7: The Low Maintenance of Stock Market Investing. Investing or trading in the stock market is incredibly low maintenance. All you need is a brokerage account, typically costing less than $10 a year. There are no high rents, property investments, or utility bills. You don't need to hire staff or manage warehouse costs. You can set your selling prices, handle multiple transactions simultaneously, and avoid concerns about return policies or product damage. This simplicity and efficiency make the stock market a highly attractive option for growing your wealth. Chapter 8: The Mobility of Stock Market Investing. Another key benefit of stock market investing is its incredible mobility. Unlike a brick-and-mortar store, you can manage your stock market investments from anywhere in the world. All you need is a smartphone and internet access. If you need to move, you don't have to worry about relocating a physical setup. Your shop is entirely digital and travels with you. This flexibility makes stock market investing an ideal choice for those seeking freedom and convenience. Chapter 9: You don't need a lot of working capital to start. One significant advantage of stock market investing is that you don't need a large amount of working capital to get started. While starting a retail shop might require a minimum capital of around $50,000, you can start investing in the stock market with as little as $100. Whether you have $1,000, $10,000, or even $1 million, you can begin your journey at any level. Some might wonder how you can grow your money starting with just $1,000. The key is to keep investing the money you earn and save from your regular job. Unlike opening multiple branches of a retail shop, which is often impractical, expanding your investments in the stock market is straightforward. You can diversify your investments across various sectors, regions, and asset classes, growing your wealth over time. This scalability and accessibility make the stock market a highly appealing option for building your financial future, regardless of your initial investment amount. By continuously learning, practicing, and applying sound investment principles, you can start small and progressively expand your portfolio, leveraging the stock market's potential to achieve your financial goals. Chapter 10. Flexibility: Invest or trade while working your regular job. Another significant benefit of stock market investing is that you can do it alongside your regular job. You don't need to be physically present, unlike running a retail store, which demands constant attention. Whether you are a business owner or an employee, you can manage your investments without affecting your primary work. Additionally, stock market investing or trading doesn't require any specific educational qualifications. Regardless of your profession, gender, age, or background, you can succeed in the stock market as long as you have the knowledge, discipline, and patience. The stock market offers exponential growth opportunities. With consistent trading skills, you can potentially double your money every 3 years, making your investments 10 times in 10 years. This market provides a chance for anyone, even those with low incomes, to achieve substantial wealth. Chapter 11. The liquidity of the stock market. One of the key advantages of the stock market is its liquidity. If you encounter an emergency and need access to a portion of your investment, such as 20%, you can sell your stocks at any time during market hours. Even if you need to sell at a 10–15% discount, the transaction is straightforward and quick. In contrast, property and other business investments often lack this level of liquidity. Selling real estate or a business can be a lengthy process, often taking months or even years to finalize a sale. This makes the stock market a much more flexible and accessible option for managing your investments and addressing unforeseen financial needs. Chapter 12. Tax advantages of stock market investing. One often overlooked benefit of stock market investing is the potential for lower tax rates compared to conventional businesses. When you earn profits from buying and selling stocks, you typically pay capital gains tax. The rate for long-term capital gains, which applies to stocks held for more than 1 year, is often lower than the tax rate on ordinary business income. For instance, in many jurisdictions, long-term capital gains tax rates can be as low as 0%, 15%, or 20%, depending on your income level. For positional traders who typically hold shares for less than 1 year, the tax advantages can still be significant compared to those of conventional businesses. If you invest in dividend-paying stocks, the dividends you receive may be taxed at a lower rate compared to ordinary income. Qualified dividends in particular are often taxed at the same favorable rates as long-term capital gains. This means you could be paying a lower tax rate on your investment income than on your business income or salary. Unlike running a traditional business, investing in the stock market does not subject you to self-employment tax. Business owners and freelancers often pay this additional tax on top of their regular income tax, which can be around 15.3% in the U.S. This extra tax can be a significant expense, whereas stock market investors can avoid it altogether. Additionally, investing through tax-advantaged accounts like IRAs or 401ks can further enhance your tax benefits. Business owners usually do not have access to such tax-advantaged accounts for their business profits, making stock market investments more appealing from a tax perspective. By leveraging the tax advantages of stock market investing, you can keep more of your earnings compared to running a conventional business. Lower tax rates on capital gains and dividends, combined with the absence of self-employment taxes and the benefits of tax-advantaged accounts, make the stock market a highly efficient vehicle for growing your wealth. Conclusion: the stock market is much more than a place where listed companies' shares are bought and sold. It's a business that can transform lives. This is my first video on stock market learning, and I'll continue to enhance your knowledge with more content. If you learned something new today, please subscribe to my channel Like this video and share it with your loved ones so that everyone can benefit from this knowledge. If you have any doubts or need further clarification, feel free to rewatch the video as it will help reinforce the concepts and clear up any confusion. Stay tuned for more videos and keep learning. See you in the next video.